Hi everyone, welcome back to this channel. My name is Perry Zhang. I'm the founder and CEO of Pallas. Pallas is a place for you to invest in diversified assets to minimize your risk. Today, we want to talk about something that's short and to the point, which is what's a preferred equity. You, as a general partner or as a limited partner, may have heard of this term called preferred equity. So what is it? So preferred equity is kind of like private equity. It's a group of individuals get together. The way they make money is to invest money into a syndication or any kind of endeavor with the expectation of being one of the first people in line to receive distributions and profits. Imagine that you buy a syndication, it's a $20 million asset, and $10 million of which is from the bank like Fannie Mae or Freddie Mac, and it's called a capital stack. So at the bottom of the capital stack, you have the lender. That's called senior debt. Suppose you buy a $20 million apartment complex and they give you a $10 million loan. And that $10 million is called the senior debt. As you can see, it's only 50% of the total purchase price. But 50% loan to value is kind of low. You do need to have a little bit more money to do the renovation. So that's where the pref equity or mezzanine debt comes in. The mezzanine debt, the reason it's called mezzanine is it's on the second level, right? Imagine this is a building, so it's on the second level. And the reason that it's not second floor is, well, second floor doesn't sound very good. You know, in a typical building, mezzanine is actually open-ended to the first floor, right? You can see the first floor. And that has a little bit of a metaphorical connection to the fact that senior debt and mezzanine and senior debt and preferred equity, they do know about each other's existence and they do know each other's terms, right? So they do actually know each other. You cannot just like hide one from the other. So that's a kind of interesting visualization. Now, this is the tricky part. The senior debt, if they're gonna lend you money, so $10 million on a $20 million apartment complex, they need to take something as collateral. And the senior lender usually takes the claim to the asset as collateral. And the claim to the asset is called title, right? You can imagine in a single family, that's why the banks have claim to the title. That's called the first lien. Or technically, that just means that they collateralize the asset in case if you don't pay your mortgage, then they take over the title. That's a contractual, aka legal obligation that you have to the lender. So the difference between pref equity and mezzanine is saying I'm also wanting a claim to the title, but I'm second in line. I have to wait until the senior debt, the lender takes their portion, and then whatever is left, I will take my portion. You can imagine that in that case, there might not be anything left for the mezzanine person to take. You see what I'm saying? And so that's why they charge a higher interest rate to adjust for their risk. Now, in today's market, because it's like say 50% LTV and the mezzanine comes and takes that additional 10%, then it's not too bad because the chances is like your property has to be wiped out 50% of its value in order for the mezzanine to not get anything. Okay, so the mezzanine's collateral is second lien, which is second position to the title. So that brings me to the point. What is pref equity? Pref equity is super interesting. They are saying, well, I don't want the title. I want the manager position. So in a typical syndication, you have general partner and LP. And instead of saying, I will be a second position to the claim to the title, I don't want that. I just want the general partner position. So what that means is that if you don't pay them, for X amount of months, or that they will put it into the contract if the occupancy drops below X% or the NOI is below X amount, then you give up some of the rights of your general partnership to the pref equity. Now, in here, you might draw a parallel between pref equity and private equity. Private equity basically takes control of a business and they are now the new owner of that business. The old owner, which is still the acting CEO, technically their boss is the private equity shop. Preferred equity works kind of the same way. They are saying we're not exactly debt, we're just second in line to receive distributions. But if we don't receive them, then I am going to take over the ownership. So preferred equity to a syndication is basically private equity to a business. You can imagine that this is actually really dangerous right? This is dangerous because if the general partner, for whatever reason, didn't do a good job, they basically not gonna make anything because the new GP now is the pref equity shop. Now, why will people do it? Well, people do it for two reasons. One is that's just like additional 10% equity. So that's very, very helpful. So a lot of general partners, I can raise all the money from the retail investors. So I'm gonna raise some money from a pref equity shop. And the second reason is because what you pay to the pref equity is around 10 to 12%. If your deal does better than 10 to 12%, which you should in a typical syndication, then you almost maximize or you increase the LP's total returns. So those are the two reasons. One is easier access to money, and second is you do increase everyone's returns if it's done correctly. At the end of the day, it's just extra leverage. Right. So I like to think of pref equity, like from a general partner's decision to take pref equity, as basically going to a candy shop. A little bit of candy, great, people have a great time. Too much candy, you get cavities. Like that's the that's the upside. The downside is it's like a spring. If you squeeze too hard trying to maximize everyone's returns, then when the spring gets too tight and when it unravels, so you can hurt yourself really bad. But if it's just a little bit tight and when it unravels, sure, you hurt your hand, but nothing gets damaged. So this is one of those things that if you're not careful, you could get yourself in a position, the consequences are really bad. Now, how do you translate that to the LPs? Well, same way. As a LP, if you are investing into a syndication that has a pref equity, and you should read that in your PPN and operating agreement, it's not a bad thing. It's just how much do they take out and how could the GP lose their rights, right? Now, the pref equity shops, they are not like, they're not bad people. It's just like a form of business. And they tend to be general partners back in the day and became pref equity because they think themselves as good operators and they are usually old and family money. And so a lot of family offices have a preferred equity division. So nothing wrong with that. One of the things I learned in this business is to take every role with just a good eye and with equanimity and with that, okay, there is a useful role that this player plays in society. And so I don't have any judgments against private equity or private equity or hedge funds or whatever, because we think there is a role that they play in society. And that's why the channel is called Pallas, because it denotes strength, wisdom, and independent thinking. People might have certain judgments about certain types of roles, but in my case, it plays a nice role. So the takeaway is, if you are a limited partner and you invest in a syndication that has a pref equity, don't be too alarmed. This is fine. Just remember they shouldn't take too much on it. If you are a general partner, it's nice to check out some pref equity shops. If you want to know some pref equity shops, just message me and we can provide some references and whatnot. Like I said, this is a fascinating industry. Alternative investing has a high barrier to entry. It requires a high, payment. But some of the wealthiest people use alternative investing to diversify their assets and to minimize risk. So not all of their money is in stocks and bonds, right? My mantra has always been the same, which is the operator matters more than the deal. People's integrity, passion, and competency dictate 80% of the outcome. That's my opinion. What's most important is that you get to know the general partners and get to know the kind of the LPs that invest in the general partners. So, in Pallas, you can chat with general partners. You can also chat with limited partners. Initially, they are anonymous because we don't want to reveal their real names. But once you follow them, connect with them, you can see their profiles and be able to chat with their experience with a specific general partner. So know that that's coming up. I'm really excited about where we are taking Pallas, and I hope that you enjoy this kind of cost-free education into the world of alternative investing and real estate syndication. Thank you so much and happy investing.